talking about how conservatively they think that Tesla's positioned well as far as that penetration as this becomes more and more predominant. They see, well, they're estimating 25% in terms of penetration in the U.S. Now, Wedbush analyst, you mentioned Dan Ives, he sees Tesla on track to hit its 1.8 million unit delivery expectation for the year. And, well, they say that, he says, I should say, that they're going to be able to do it with margins expecting to trough initially in the next 1 to 2 quarters and then ramp back up into fiscal 2024. But he also believes China demand this quarter is basically progressing very strong and with a steady, the last few weeks of June, he thinks that should translate into record China quarter for the second quarter.
In today's video, we're going to embark on a thrilling adventure into the world of electric mobility, a relentless pursuit of excellence and innovation that will propel Tesla to unprecedented heights. Tesla has recorded a meteoric rise in its unwavering quest to dominate the electric vehicle market. However, some claim that this growth story may not be for long. While these predictions are not due to perceived incompetence on the part of Tesla, they affect the very core of Tesla's future valuation, challenging the automaker's unrivaled innovation and unwavering ambition as it sets the stage to dominate the auto market. What are those predictions, though, and what do they mean for Tesla? You're about to find out, so brace yourself as we take you on this exciting journey.
In the meantime, EV maker Rivian shares are trading slightly higher this morning, up about 2%, after an announcement they have agreed to adopt Tesla's charging standard. Ford and General Motors struck similar deals in recent weeks, securing access to Tesla's expansive North American charging network. Joining me now, Yahoo Finance's Pras Subramanian, who covers the auto industry for us. So Tesla keeps, racking up these partnerships. I'm still wrapping my head around what it all means. Investors, interestingly, seem to like this for Rivian.
Yeah, it's another domino has fallen in this whole sort of charging landscape here, where basically Tesla's NACS standard is now going to become, I think it's going to become the default standard for North America. You had GM signing on, you had Ford signing on, and now Rivian saying that in 2024 they'll be able to access the charging network. In addition to the fact that in 2025, newer vehicles are going to add a native Tesla port, the NACS port, in the car so they can go directly to the Tesla network without having to use an adapter. So that's a big deal. I think Rivian saw that they needed to hop on board in order to sell their vehicles to people that want to use that network. That's 12,000 superchargers. They're reliable. They're available. You got to hand it to Tesla there. They actually made a strong network, and everyone wants a piece of it. After Ford, ticked it off, they began that whole process. So here we are. I think that's a key driver here is that reliability and access to that network that everyone wants.
In recent years, Tesla has been a dominant player in the EV market, with its sleek designs and cutting-edge technology capturing consumers' attention worldwide. Similarly, the market for EVs has grown rapidly in recent years, and is expected to continue to grow at a fast pace over the coming decade. Although forecasts for the rate of EV adoption over the next decade vary, many predict a strong acceleration in EV adoption. Hey guys, welcome back to Tesla Tomorrow. There is no denying that in the last decade, the global EV market has grown exponentially, especially with sales growing by 43% from 2019. Research shows that the number of EVs sold in a week in 2021 was higher than the amount sold in the year 2012 as a whole. As electric cars continue to gain popularity, it is widely believed that EVs are the future of transportation. And not only will mainstream electric cars transform the automotive industry as a whole, but most importantly, they will help replace the use of fossil fuels in a bid to decarbonize the Earth. However, in a recent research, Morgan Stanley seems to not be so bullish on the future of EVs. The investment bank estimated that EVs account for less than 7% of new car sales in the US year to date. It also claimed that by 2030, the US EV penetration will hit 25% and a 75% penetration by 2040. What does this leave then for Tesla and other EV makers? Let's find out. But before we continue, if you like this type of content, hit that like button, subscribe to the channel, and turn on notifications to keep up to date on everything going on with Tesla. Electric car sales jumped more than 10 million last year, with China accounting for roughly 60% of the market, according to a report from the IEA. This figure includes the sale of battery electric vehicles and plug-in hybrid electric vehicles too. Despite challenges in 2022, automakers continue to roll out new models, expanding segment and price point availability for EVs. It is expected that this increase in model availability will continue, and it will be critical to increasing EV adoption. The shift towards green transportation and more affordable fuel in the form of electricity is accelerating like never before. The electric vehicle market is projected to grow to a stunning $693 billion by 2030, representing a compound annual growth rate of 17.3%. As we start a new age of sustainable transportation, electric cars are capturing the hearts and minds of consumers worldwide, thanks to improved technology and increased environmental awareness. One vital reason why Tesla stands to benefit from this surge in EV demand is because of its supercharging network, which it has started to license. Rivian recently announced that it's going to join GM and Ford in adopting Tesla's North American charging standard, meaning that Rivians will also be able to use Tesla's supercharger network. This Rivian-Tesla agreement comes about 7 months after Tesla said it was opening its EV connector design to the world, publishing the specs for the design on its website. The low number of EV charging stations in various countries around the world has been a major constraint for EV adoption. Although several countries are in the process of installing EV charging infrastructure, some have been able to install the required number of EV charging stations, except in some states. The demand for EVs is expected to continue to increase, with a well-developed EV charging network across the world, and more companies are yet to develop such charging networks. Therefore, by opening up its charging network, Tesla is set to send its car demand to incredible levels. In Q1 of 2023 alone, the automaker had the largest sale of electric vehicles, amounting to 422,000 vehicles sold. Beyond demand, this is also good for Tesla stock. The stock jumped more than 4% following the news of Rivian joining the board with NACS. No doubt a lot of value seems to be driven by the validation that Tesla's supercharger network is receiving. Even Morgan Stanley estimated that the charging network could be worth more than $100 billion by 2030. There's also one thing clear from this recent announcement from Rivian, GM, and Ford, and that is that they all want to secure access to Tesla's supercharger network for their own EV owners. As the electric vehicle market continues to thrive, EV manufacturers will invest a lot to provide better user experience, advanced EVs with longer ranges, quicker charge times, and better overall performance. The electric vehicle landscape is rapidly changing as both technology and interest evolve, and the coming years will see many more EVs take to the roads. By 2035, the largest automotive markets will be fully electric, providing a glimpse into both a future of green energy and a significant economic opportunity. Electric vehicles will likely continue to become more prevalent, as it is projected that these cars could make up a total of 45% of global car sales by 2035. In contrast, sales of ICE cars are expected to see a gradual decline as the market shifts towards EVs. As the global EV market continues to grow, several automakers have announced their plans to increase the production of their electric car range, and as a result, this provides additional opportunities to go electric. For instance, there could be leasing of electric cars and vans, which is generally a more affordable opportunity to operate one of these cars as opposed to buying a car due to its lower monthly cost. Overall, though, there are lots of opportunities for Tesla in this growing EV market, and so it's best for investors to remain optimistic about the leading car maker. But what do you think? Let us know down below. And if you want to know more about the groundbreaking moves Tesla's been making over the last few days, go ahead and click on this next video on your screen, and we'll see you there.